waiting for interest rates to drop? Don't, and here's why. My name is David Piatek with VA Housing Education, where we specialize in educating the military community around using the VA home loan. So let's dive into it. So right now, there's a lot of people that are on the fence thinking about buying a property, but they think that interest rates are too high and they're waiting for interest rates to drop. The challenge with something like that is that as values go up and rates drop, the payments actually stay the same. So in theory, right, you'd want to purchase at today's market, lock in the equity in your property, and then later refinance that amount so you're saving even more money. Now, it's easy to say that, but let's actually break that down by looking at the numbers and how they change, right? And why I talk about interest rates, it's very cyclical. Rates go up and they go down, they go up and they go down. And this has been pretty much the history of interest rates for the last 20 to 40 years. Something to keep in mind when we're talking about this as well is to really be able to determine, can you afford a property today at today's interest rates, which is more of a qualification issue, right? If you're a veteran, you have a lot of options with your VA home loan. There's a lot of flexibility. And there's also people that are on the fence that own properties that are thinking about selling them, causing a hemorrhage in the industry for buyers to be able to purchase properties because a lot of sellers have low interest rates. So in the first example, and I'm going to talk about different price points as well. So it's not just like, oh, we're going over $1 million properties. That's not the case. Let's focus in on what it actually looks like for properties that are going to be across the payment spectrum. So I'm going to put those up on the screen now. $400,000 at 8% is about a $29.40 payment. And a $500,000 property at 6.75 is about $32.43. If you buy now and rates drop to 6.75, it actually drops to $25.94. So still you're saving $648 a month. So the same thing applies when we're looking at a $600,000 property versus a $700,000 property with a 8% and a 6.75%. Payment is about $4,200 on a $600,000 property. At $700,000 at a 6.75, it's about $45.40. If you buy at the $600,000, you refinance at the 6.75, your payment's going to be about $38.92, saving you $648.60, which is literally the exact same payment difference between the two sections. And the same thing applies at an $800,000 to $900,000 property price point. I'm going to show on the screen all the different comparisons so you guys can actually see the numbers yourself. Again, numbers don't lie. So if you're thinking about purchasing a property and you know you're going to be in a property for a long time, it actually can make sense to purchase a property. Again, everyone's situation is different. So check out our other videos where we talk about qualification and eligibility for the VA home loan. Like and subscribe to the channel. My name is David Piatek. You have a great day.